Fannie Mae and Freddie Mac, the federally backed home mortgage companies created by Congress, are preparing for the worst. Neither one originates or services mortgages. Instead, they buy and guarantee loans issued through lenders to free up cash and minimize lender risk to keep the real estate machine wheels turning. With home values growing at unprecedented rates the last few years, gaining trillions of dollars in homeowner tappable equity, the risk of default was really low. Tappable equity is that cash actually available to an owner while keeping a 20% equity stake intact. But times have changed. Fannie and Freddie say they're prepared to weather the economic storm clouds brewing on the horizon as they sock away billions of dollars for future losses. Fannie and Freddie are profitable, with each having billion-dollar third quarters in 22, and each have set aside billions to cover future losses. The main reason that drives these companies to build up their reserves during the last quarter is the prospect of falling home prices, which could make it harder for a foreclosure to be avoided if a homeowner gets behind on their payments. According to Black Knight, a data mining company, home price declines in July, August, and September wiped out $1.3 trillion of the tappable equity we talked about just a minute ago. This is the largest decline on record, but only a small percentage of borrowers have less than 10% of their equity in their homes. The average borrower in Fannie Mae's portfolio has built up strong equity in their homes, but lower prices, which are clearly evident recently and are expected to get worse, will increase the likelihood that loans will default and increase the amount of credit loss on loans that do default. In a forecast by Fannie Mae economists last month, they said they expect home prices to actually decline 1.5% next year and that home sales will fall by 21%. Lately, we've seen both these numbers bounce around quite a bit, so don't be too surprised if they turn out worse than expected. Freddie Mac CEO Michael DeVito said on an earnings call, the most recent Dodd-Frank Act stress test confirmed that Freddie Mac has sufficient earnings today to weather a hypothetical, severely adverse economic scenario. David Benson, the Fannie Mae CEO, said the industry is looking to us to be a stable pillar for the market, as well as taking the lead on housing affordability and equity. Recently, federal regulators ordered the companies to slash fees for many first-time homebuyers and increase fees for most cash-out refis. In the last year, Fannie and Freddie have grown their single-family mortgage portfolios by trillions. For now, though, serious delinquencies are well down from a year ago as COVID borrowers continue to catch up. Fannie Mae's quote-unquote seriously delinquent rate is less than half of what it was the same time last year. Freddie reported similar numbers thanks largely to a decline in loans and forbearance. The mortgage industry as a whole has taken a terrible beating lately, and Fannie and Freddie, they're no exception. New mortgage business, because of high interest rates, has dropped off significantly and refinancing has all but evaporated. The evidence is all around us, with some of the largest lenders in the country cutting jobs at an unprecedented rate. Loan Depot is just one obvious example. The whole point of this Inman article and the point of this video is that two of the most influential companies in the mortgage business are taking action now to guard against long-term downturns that could cause real problems in the future. To be clear, neither company is predicting a huge increase in foreclosures, but it seems to me they see enough instability. They are prudently laying a strong foundation to weather a financial storm just in case. I don't know about you, but it makes me want to reinforce my war chest. If you like this video, tell a friend, give it a like to help me spread the word, and subscribe so you know when the next one drops. As always, I appreciate you and your time. Thanks for watching. Talk to you soon.